Hey, this is Sasha. Thanks for joining me in today's video. And today what I want to do is share with you how to set up a neutral balanced Iron Condor. So stay tuned. We're going to go over it in this video. All right, so it's wise and important to know and understand how to set up a neutral and balanced Iron Condor. So that way, later on, when you want to dissect it, maybe make it a little more bullish, maybe make it a little more bearish, then you're able to understand, hey, what's the starting point? Because if you have a neutral Iron Condor, you kind of know what's the balance, what's the normal. So that's what we're going to cover here in this video. So anyways, to kick things off and get things started, if you're brand new to this channel, I would definitely take a look at our website at tradersfly.com. There's a getting started page and options 101 if you're kind of brand new. And you can go into freebies. There's a free option mini trading course. And if you want to learn more about Iron Condors, check out the Iron Condors course under courses. Anyways, to kick things off, let's go in and let's do an Iron Condor on our favorite fruit, which is apple. Okay, so if we look at this chart, it's just going boom, 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 boom. I'm not really too concerned about where this chart is exactly going at this moment because we just want to set up the balanced Iron Condor. If you notice you're doing the Iron Condor, let's say 10 times, and you're always setting it up over here on the right and it's always getting in trouble on the right, then you'll probably set it up more bullish. For certain stocks, they just keep going up, right? So you might want to lean a little more bullish on some of those. But for now, let's just learn how to set up an Iron Condor. So here's the Thinkorswim platform by TD Ameritrade. If you zoom in on it and just kind of check all this out, you can see here's kind of the days till expiration. So I'll go to about 24 days. If I go 17 or 10, you get more price risk the closer you go. If you go further out, you get more vega risk. So let's do about 24 to start with, okay? Actually, why don't we do, 24. Yeah, that sounds like a good one. Could do 31. So now what I'm looking at here is the delta side. So here is my delta, and delta tells me also probability chance of success. Okay, so if I do a, let's say a 0.2 delta or 20 delta, it'll be negative on the put side. So these are the puts, those are the calls over here. If I do kind of a negative 20 delta, that says that 20% chance of success if I'm a buyer, but 80 if I'm a seller. And with an Iron Condor, you're a seller. So we will go to about a 15, okay? And 15 in this case, it's not perfect. If you're an engineer, it's 14.7. So it's right around here, and I'll go a couple strikes out. So we will go in and we'll sell the Iron Condor right there, okay? So there is the Iron Condor, and I'll fix my put side. So I've got 118, and let's just go to maybe a couple points out, 115, okay? 18, 17, 16, 15. Okay, so let's do the same thing on the other side. So now we've got the call side. As I look into something like this, okay, so there's the call side. As I check this out, 15 delta is around a 134. So I'll change this to selling the 134. Okay, so there it is, 134. And I'll buy the same distance out. So that'll be, what is that, 4 points, 3 points? Something like that. And that should give me, you can right click, analyze the trade, an Iron Condor, and there we go. So I've got now this Iron Condor set up. You can see it's balanced, which means the capital on the left right here used is the same that's on the right. If you don't know or understand how to read this picture, the bottom right here is the strike price. So this is the strike price, the stock price. So stock price. This on the is your loss or profit, anything above the zero line. So here's our zero line. So our current line is the white line, and the green line is at expiration. So with time, this contract and spread decays and loses value about $2 a day. Okay, so what you'll notice is if I shift the time forward, okay, watch this time, if I shift it forward, you can see my profit and loss for the day starts to go up, and that white line gets closer to the green line. So after about a week or two, you can see I'm up, as long as it's kind of in that range, I'll be up profitable. And can I get out of it early? Yes. Can I stay in it for 2 minutes? Yes. Can I stay in it for the whole time till expiration, let it expire? Yes. You just collect the profit and premium at expiration. If you go outside those ranges and you do it a little too quick, you might have to buy it back at a loss, or you could get assignment. So that could be a little bit of an issue. And if you see it moving a little to the left or right too quick, you could get out of it early with a slight small loss. So that's kind of a basic Iron Condor. So what is balanced mean? Now, balanced typically means that if I'm short vega, I want to lean a little short delta. Okay, because some people think balance because I have some negative delta. So what do all these things mean? Delta means price or price risk. Okay, theta means time risk, and vega means volatility risk. So price risk, time risk, and volatility risk. And gamma is also price risk. It's just the rate of change of delta. So I'm not going to worry about it right now. But ultimately, when you look at this, okay, these are your risks, but they are also your money makers. Okay, they make you money, but they are also your risks. So when you go in and look at these things, okay, you want to go ahead and say, okay, well, am I balanced? Now, some people say this is not balanced because they want a zero delta. They want to be right in the middle. So to get that, let me just move this out maybe 2 points. And now we're almost at a zero, right? But you think this is balanced, but really it's not. So let me bump it up to 20 contracts. And I'll tell you why it's not really balanced. The reason it's not balanced is because if you look at your risks and your money makers, what's the biggest risk, or what's the biggest money maker? So let's zoom in on here. What's the biggest risk and what's the biggest money maker? Biggest risk and money maker is actually your vega. Okay, so when you look at your vega, if you've got a short vega, it's nice to have a little short delta. Okay, your next biggest one is kind of your theta. Really, it's your gamma, but that's the rate of change of the delta. But you've got your theta, that's kind of the next biggest risk. So it takes you about 2.5 to 3 days to make up a 1 vega problem. So what you want to do is, if you want to be more neutral on this, you would bring in a couple of on the call side. Okay, and now you could also extend the put side a little bit. I don't know, that one's not traded, that one's not traded, so maybe not. Maybe not, we won't do that. We'll just bring in the call side a little bit more. And now I've got a short delta against my short vega, and that's more neutral. Why is it more neutral? Because of the way that it makes money. And the way that it makes money is that basically, as you look into this, okay, so this goes in, and as it pulls back, what happens when stocks pull back? Volatility goes up. So let's say it goes up 3 points. Well, this line drops. But when stocks pull back, at least you will be at the high point of this line, because you started here, now you're going here. That hash mark is the current live price. So I would at least be at the top of the mountain. Okay, so here I'd be down 297, but then here I'd be down 223. So basically the delta would do some work and I'd be at the highest point of the mountain. Now, if you think a 3-point volatility drop can't happen, it sure can. But if you think you're not cushioned enough, then what can you do? Well, I can bring in the call side even more, okay, and now have a negative 146 delta. So that way, if this volatility drops 3 points, right, and then pulls back, my loss is very minimal, okay, because that line drops. Because when it goes up, when the stock goes up, volatility actually drops. So let's say now it drops 3 points. Well, as the stock price keeps heading higher, that volatility dropped. And then let's say it drops some more. So let's go to -5. So as it's dropping, it's actually helping me out. So I'm not really too worried about it. So the point being I'm sharing with you here is that a neutral Iron Condor, a balanced Iron Condor, is, if it's going to have some negative vega, position has some negative vega, you'll probably want to lean a little short delta. And that's usually for like 20+ day duration. If you're doing like less than 15-day duration, it's less important because you have a very quick theta. But in this case, we do have some short vega that's pretty high and heavy. So we will want to lean a little bit short delta. How much? That just depends how much you want to protect on the vega side. So for some people, if the market's a little toppy or top heavy, you might want a little extra negative delta. So that's just to cushion these kinds of Iron Condors, because they get into bigger trouble as they sell off. So anyways, that's a matter of personal taste. And with time, as you do more and more of them, you just kind of learn, okay, well, it's always getting in trouble in this way, so I want to tweak it in that way. So anyways, all right, so I'll let that one sit in the paper account for now. But that's how you go in and do a balanced neutral Iron Condor from a setup. So thanks for joining me. Hope you enjoyed this video and you got a lot out of it. This was kind of around that 14 delta. Could you do a 10 delta? Sure, but you make a little less money, but you're a little safer and wider. If you go a little tighter, like a 20 delta, you could make a little more money, but you're a little tighter and closer to the current price. So it's a matter of perspective. So thanks for joining me. Check out some of these great freebies that I have. Sign up to the mini course, and if you want to learn more, check out the Iron Condors course, which is like tons of hours of training on Iron Condors specifically. Thanks again, and I will see you in the next video.